Welcome back, traders. In this video, we're just going to be diving into one of the most valuable skills in Forex trading, and that is how to find market bottom and market tops. Now, this is crucial because entering at the right time means everything. You don't want to jump in too late or got caught in a reversal you didn't see coming. So let us start with why this matters, all right? Market tops and bottoms represent major turning points. They are where trends either begin or end. So if you can learn to identify them consistently, you gain a serious edge in your trading game. Now, how do we find them? The first way is through price action and candlestick patterns. The first step is to understand what the price is telling you. Price action never lies. You look for signs of exhaustion, like pin bars, engulfing candles, and doji formations. These patterns often appear at the end of a strong trend, just before the reversal. For example, if you have a pattern like this, you can see two dojis form. After the formation of these two dojis, you can see this bearish candle and can see this next long bearish candle, signifying that bearish momentum is building. Remember that doji represents state of indecision. So after the formation of these two dojis, it shows that the bulls were already getting exhausted. And then look at this strong bearish candle that formed, showing that bearish momentum has intensified. In such a scenario, it would have been a good time to enter a sell and set stop loss appropriately above that swing high. And you can just target key support zones for your take profit. All right. Another example could be maybe if you see a bearish engulfing or whatever bearish candlestick pattern that you find. Then for a bullish example, you can see in this case we had a morning star, a bearish candle followed by a doji, an indecision candle, and then a notable bullish candle. So it shows that bullish momentum was intensifying, although this was a continuation pattern. It was a continuation pattern in this case. So this should have been a good place to enter a buy trade. Stop loss below that pattern, that swing low, and then take profit can be around resistance zone. Okay. Now, the next way to find tops and bottoms are support and resistance zones. Tops and bottoms often form around key support and resistance. All right, so you look at your chart and mark the horizontal zones where price has reversed before. If price approaches a level where it has previously bounced or dropped sharply, pay attention. You should pay attention to such zones, right? That's a possible reversal zone. So combine these levels with candlestick confirmation and you've got a strong potential setup. The next thing to pay attention to is the volume behavior. The volume behavior. Volume tells you a lot about the strength behind a move. As the market approaches a top or bottom, volume usually spikes, then drops. Why? Because the big players are either unloading or loading positions. So if you see volume drying up during a continued trend, it could mean the move is losing strength. Like you can see what was happening around here, right? You can see how the volume kept on just remaining shallow until when we finally had a reversal, and you can see that there was a spike in volume here and then it came down. You can see that was when this reversal took place. All right. Now, the next is indicator confirmation. While price action is king, certain indicators can help confirm your analysis. For example, tools like the RSI, that's Relative Strength Index, and the MACD, that's the Moving Average Convergence Divergence, can signal when a market is overbought or oversold. An RSI reading above 70 or below 30 near a major level can add extra layer of confidence to your reversal call. Okay, but don't rely solely on indicators. They are just tools to support your confluence. Then finally, you need to understand market psychology. Every top and bottom reflects psychological shift. Every top and bottom reflects psychological shift. Tops form when the bulls run out of steam and sellers take over. Bottoms form when sellers are exhausted and buyers step in. So you should look for signs of indecision, trend weakening, and failed breakouts. All right. These clues often signal that a reversal is brewing. For example, you can see this particular scenario again. You can see we had the top one here. You can see this bearish engulfing that formed, showing that the bears we are taking over. See this bearish engulfing. And right after that bearish engulfing, you can see that we had a significant sell. Should have been a good place to enter a sell. Stop loss above that high. Take profit around key support zones. And decide to take your profit here if you have a good risk to reward ratio. All right, so finding market tops and bottoms is not about predicting. It's about reading the chart with clarity, spotting the signs, and stacking your confluences. Once you do that, your trading becomes smarter, more precise, and less emotional. If this helps you, smash that like button, subscribe to the channel, and hit the notification bell so you never miss a new content. Let me know in the comments, what is your go-to signal for spotting reversals? In the meantime, thank you for watching, and I hope to see you in the next video.